I'm delighted to welcome our guests on the container market who will hopefully be giving us as enlightening and interesting insights as the bulker market panel beforehand. The container market, as you all know, has seen some strengthening across all of the sectors and is showing increasing signs of stability, even in those sectors that aren't rising at a rate of knots. Utilization rates are also coming down, and we're seeing the idle fleet reduce significantly. Also, to date, there has been some sense being shown by owners in relation to new builds, and the number of new builds is also coming down significantly. As far as the market is concerned, we're seeing a veritable mix of challenges for operators and owners. We're seeing consolidation amongst the big players. New players are coming in, and new countries are getting involved in container markets that weren't previously involved in container markets, such as Greece. We're seeing new financial structures, the increased use of the leasing markets, operators getting vessels off their balance sheets and looking to the leasing markets as a solution. New technologies driven by environmental requirements and laws. A change in the markets themselves. Production hubs are being set up closer to the markets, closer to the buyers. We're also seeing the unstoppable rise of the internet giants, the Amazons and Alibabas, looking to get into the vertical market structures that they favor. We're seeing increased IT, technology, digitalization demands, and the risks that those advances carry with them as far as cybersecurity, GDPR, etc. are concerned. And of course, finally, we're seeing the now age-old problem of ballast water and scrubber regulations coming in at a rapid rate of knots too. To make sense of all of this possible confusion, our esteemed panel will hopefully take us through and guide us. And a warm welcome to Aristides Pittas, the CEO of Euroseas, to Ian Webber, CEO of Global Ship Lease, and to George Youroukos, CEO of Poseidon Containers. Now, these three gentlemen were to be accompanied by another two. The panel is rather depleted, so we really are going to have to, the spotlight is very much on you guys to take us through all the questions that I'm going to put through to you. But please make it a discussion amongst yourselves. Don't wait for me to ask the questions. And please, if there are questions from the audience as we go along, please stick your hand up and we will take questions as we go through. The first question then. The recent consolidations, and we've seen the establishment of one, we've seen the merger between Maersk and Hamburg Süd, Hapag-Lloyd and UASC and CSAV, and COSCO and OOCL. The primary objective of those consolidations was to achieve scale, and the word scale has been frequently mentioned by CEOs of the largest companies of late. And the purpose of achieving scale in fleet size, is to try to achieve the economies and efficacies that we all have read and known about. Gentlemen, how else, in your views, can scale be achieved over and above fleet size? Are we just talking about getting bigger, or can scale be achieved in other ways? And the first question, please, to go to Aristides, if you wouldn't mind.
Good morning. Good morning, everybody. This is a great question, and I think the focus lately has been on scale. Hello? No, that's much better. Okay, good morning, everybody. This discussion about scale and consolidation is a discussion that we have been hearing for quite some time, and we've seen it being implemented in the container space from the side of the charterers. One thing which is more important than scale, and we should never lose focus on, is profitability, because this is the major reason why all businesses exist, to be profitable, not to be large. So large can help And it does help in many times in improving profitability. But please, please don't, think only about scale, which can have very disruptive and bad results. And shipping is a very cyclical market. And in a cyclical market, if you're big and the market gets sour, that's even a bigger problem. So you have to find areas where the people that merge or consolidate in order to achieve scale actually get advantages and significant advantages in that. From the side of the charterers, this was a necessity to happen because the trading in containers has been suboptimum. Ships go around carrying very, very little containers at points. And the objective of maximizing the number of containers you can put on your ship, the objective of having the biggest ships, which are much more economic in terms of the cost of carrying a container, were there. And all these companies started and had to go along that route. And this is something that to a great extent has happened. I don't think it can happen much more. We've got just a few big companies or groups of companies. One, for example, is 3 different companies working together. And this is big enough. Now, the problem comes to what do the operators and the vessel providers do to compensate this difference where we have the few big players and very many operators, vessel owners, vessel providers around. I believe that as long as there are quite a few still operators and there is so many, but so many owners, the market, the charter market works quite efficiently. So even if you're a very big company or you're a small container company, container owning company, you still get the market. It's still a market, especially for the smaller size vessels. For the bigger size vessels, there are much fewer players and they're maintaining and creating relationships with a few big operators is very crucial in your profitability at the end. So I don't think that for the smaller size vessels, there is this absolute need for consolidation. The problem and the focus has to be in profitability. Extremely small companies, of course, cannot operate efficiently, but even medium-sized companies can be very efficient from the cost side of operations and in the chartering side of operations. So I said quite a lot. Let my
So if vessel numbers alone, size of operation is not the only scale factor, how else can the small and medium operator achieve the scale in order to be able to be attractive to the large customers? George?
Well, I think I will just have to speak about what Aristides said in a bit more technical way. Liner companies, since they made the mistake of ordering these very large ships, the 20,000s, they realized that those ships, in order to be efficient, they have to be also filled with containers. As on paper, yes, they were very efficient, they had economies of scale, subject that they were filled. And it's not an easy thing to fill, a 20,000 TEU ship where you have a line that has 9 or 10 of those ships in a string. Therefore, the need of consolidation started with the 3M, which didn't pass the Chinese, if you remember, authorities. What was it? They were judged as a consortium, and then they did a 2M, and so on and so forth. So all of that was initiated to start filling the big ships. Since then, the cascading effect has happened, where the liner companies, the thing that they care about the most is the slot cost, which is how much it costs them for each box in the container, in the ship. What is the cost to them for each space in the container ship? And that's the slot cost. The slot cost goes down as the ship goes up. The bigger the ship, the lower the slot cost. Therefore, the mentality behind all liner companies now is to try and get in every service, whether it's a small service or a big service, the largest possible ship, so that they can achieve the lowest cost to them, slot cost. So obviously, in order to have a large ship being traded in every possible trade, and when I say large ship, it doesn't have to be at 14,000 TEU. A large ship is a 6,000 TEU in a trade that used to be dominated by 2.5s, or a 2.5 in a trade that used to be dominated by 1,000s. So larger, not large by absolute numbers. So in order to fill the services with bigger ships, you need consortiums. You need these consolidation of charterers, where they are 2 or 3 liner companies operating that service, and therefore they have a larger, each one putting together the market share, they're putting together the boxes, so they can fill the ships. So that's, I think, what has initiated the whole thing about consolidation of liner companies, and I think will continue, because it makes sense. I don't think there's going to be much more consolidation, because they have already consolidated quite a bit. They're not going to end up with 2 or 3 at the end of the day. So now on your question about a smaller owner, what can a smaller owner do to be attractive? I think he has to have the right ships. He has to have the ships that the liner companies want. And that's, in containers, it's more of it's not as straightforward as you have in dry bulk or in tankers, where most ships are more or less the same, You just have to look at the cubics, you have to look at the consumption, and that's more or less what you have to look at. In containers, there is a lot of features in a ship, and you can pick and choose. It's the depth, the width, the length, the reefer capacity, the fuel consumption, the homogeneous loading, and so on and so forth.
Thank you. And would you, and this is to Ian, we've just heard there that the smaller operators, the medium operators, have to have the ships that the larger operators want. Tell us a bit about those ships. I mean, we've heard from Jeremy Nixon, Soren Skoo, that in order to be compatible with the big liner operators, these vessels have to have the same integrated platforms, have to adopt the same IT structures and networks on board. Is that a prerequisite to being attractive to these big liner operators? Are these small operators having to adapt and have the same integrated platforms as the larger liner companies?
Well, I would say that every operator in the business, be it owner or charterer, has to adapt and evolve IT systems in particular. Whether they need to be compatible or not, completely integrated or not, I don't know. But picking up on a couple of things which Aristides and George said, one of the reasons why there's been corporate consolidation and contractual consolidation by virtue of the alliances, and there are 4 big alliances which cover the top 9 liner operators, and those top 9 liner operators account for some 83% of total ship capacity on the water. One of the reasons why they consolidate is to get network efficiencies, which George alluded to facilitate the efficient operation of those ship systems. On the face of it, that's bad news for owners like us, because the big companies will be doing what they do today with fewer ships tomorrow. And we certainly expected a hiccup in the charter market around this time last year when the big alliances came into effect. But actually we didn't see that, quite the reverse. And the strong market has continued with a little bit of a lull. And we think that we didn't see that because the alliances were so keen to put on a fantastic service offering for their customers that they possibly structured their ship systems to be too large, which put some strength in the charter market in February, March, April last year. We then saw a negative reaction to that. The charter market sort of flattened a bit last year, but now, again, with reasonable demand growth, the charter markets continue to improve. And a word on the smaller operators and profitability, which Aristides said. I can't remember what numbers they are, but 10th or 11th or 12th or 13th largest operators are Wanhai and PIL. Very successful liner companies, out with the conference structure with medium-sized and smaller ship fleets. They're regionally focused, they're inter-regional trade specialists, and they can make money in their niches where the other operators, the very large companies, seem not to be able to.
Thank you. We heard from the bulk panel before that in a good market, it pays to trade spot and to grab as much as one can while the sun shines, make as much hay while the sun shines. Given the consolidation in the container market, how does the smaller tramp owner fit into the new structure, and how does he or she benefit or ensure that he or she benefits as much as possible in the present rising stable market? Aristides.
I think what is important to realize is that there are two different markets playing out in the container sector. The market for the big ships and the ships above 10,000 TEU, it used to be above 6,000 or 7,000 TEU, but more of the medium-sized vessels have come down to the normal charter market, and there we continue to see in the smaller sizes, we continue to see that there is a charter market, there is a spot market. It's not a spot market, it's small period charters from 2-3 months up to a year. On the bigger ships, it's a different question. You have to have a pre-agreement with the charterers, you fix for long term, you have to do that. You cannot really have smaller companies competing there. It's bigger companies, bigger money, it doesn't apply. The question is for the smaller vessels, where we traditionally and historically have had the market. Initially we had many operators, as we said, and many vessel providers. Nowadays there are much less operators, but there's still many vessel providers. Will this market continue to function? Therefore, will we have a charter market where we see charter rates going up and down significantly, going from $5,000 to $20,000 if we're talking about a 2,500 TEU ship? Will we have that? I think we will continue to see that for the foreseeable future. I don't see the dynamics being there to change this structure at all. The bigger operators, they are concentrating on maybe acquiring bigger ships. On the smaller ships, they are not really focusing, and they are relying on the charter market to be providing them. So I think this is something that will continue, and we will continue to see people fixing for shorter terms and playing the market and buying ships when they are cheap and selling them when they are expensive. I think this is set to continue for quite a few more years.
Thank you. George, do you have any comments on that? I mean, the typical tramp owner 2 years ago had 15, 20 liner companies to call to try to employ his vessels. Now he or she is down to half that. That must impact heavily on the tramp business, doesn't it?
Well, yeah, that's not a problem really. It all comes down to what kind of ships you have and whether your ships are in demand from the liner companies. Even if you have less liner companies than before, the competition between, I mean, you just need two wanting your ship and you get your charter rate going up. You don't need more than two to compete. So we do not see a problem. Actually, we see this very positively, the fact that the liner companies now, they are stronger, bigger, and they're more focused on, on what they used to do. When they were smaller, they were trying to, buy ships, order ships. They were a bit more confused on their strategy. Now their strategy is purely logistics, and they have decided that they want to build the very large ships and let ships below 10,000 to the tramp owners to be chartered in. So no, the answer is I don't think this is a problem for a good company that has the proper ships and a good name with long history. Liner companies like that. And actually what we see more and more is that the liner companies are trying to become partners in a way with a few larger operators so that they can have a steady flow of ships coming from them. So that's something, other thing we see very positively.
Thank you. Given that we're seeing more and more, hearing more and more talk about 3D printing, we're seeing more and more production hubs coming closer to the market, sometimes in developing markets, away from the traditional areas of industrialization. Is it perhaps, what's the panel's view on the era of the 20,000 TEU? Is the proliferation of the 20,000 TEU vessel an inevitability, given the changes that we've just discussed, or has it seen its day, and that the wise choice for investment is the smaller TEU vessels, giving owners, operators greater flexibility? Aristides. Oh, sorry, Ian, actually, you haven't, you have a go.
Yeah, it's an interesting question. You know, we heard from the dry bulk panel and from my colleagues about the 20,000 TEU, the arms race to ever larger ships, the drive for unit cost efficiencies, and that's particularly with the main trade lanes, Asia, Europe, and the Trans-Pacific, where freight rates are enormously volatile, and to remain at all competitive, you have to keep your costs under control. Those ships obviously can't trade in any other trade lanes at the moment, and not for the foreseeable future. On the other hand, the medium-sized and smaller ships, which is by and large where we all are, and we're very happy to be in, which is the charter market. Big ships aren't in the charter market. Are much more flexible, they have global deployment, and I fully believe that that size category is here to stay. It's underbuilt at the moment. The order book to fleet ratio overall is 14%, which is off the bottom, but is still historically very low. But within that, if you look at mid-sized and smaller ships below 10,000 TEU, it's only 3%. So it's an underbuilt sector because capital has been directed, the scarce capital that's been available has been directed to the strategic ships. So you can still pick up mid-sized and smaller ships in the second-hand market at a significant discount to new building price parity, which is going to continue to put downward pressure on the order book for the next little while. So I wouldn't expect significant amounts of investment capacity, certainly not on a speculative basis, to go into the mid-sized and smaller sector until second-hand values and charter rates improve further. And just to remind you about how the market works, 18 months ago, an 8,000 TEU vessel was in the market for around $8,000 a day. Notwithstanding the consolidation that we've seen, the alliances that we've seen form, and the number of large companies that shrink, the charter rate today is not far off 3 times that, low 20s per day. So the market is still working very effectively, and there's no reason for that not to continue.
Aristides, do you want to say something on that?
No.
In the panel's view, and just bearing in mind the time we have left, what is the sweet sector of the container market? Is it the top end? Is it the bottom end? Is it somewhere in the middle? Is that likely to change over the next year, 2 years? What is the sweet sector? George, if you could start off.
You're looking at it, the three of us. No. Well, I would say that obviously not in large ships, because that's not something for Trump owners anyway. I don't particularly believe into the into the leasing model of getting a ship for 10 years charter, expensive ship and with a high charter rate, and then make a reasonable 8-10% return. That's not the model we follow. So I would say that looking from a Trump owner's point of view, where you have to build or buy your ship at the right time, which should be the bottom, and then wait for the market to improve and make money, which is the standard shipping model, I would say that the sweet spot is to have ships that offer to the liner companies low slot cost, like I said from the beginning. That's the focus of all liner companies. And in this respect, my pick is wide beam ships So post-Panamax, as we used to call them, post-Panamax ships mainly. That's my first preference. So ships between, let's say, 5.5 to, I don't know, 9,000 TEU, which is where the Trump owners, can operate these sizes. That's my preference. Of course, feeders are great ships, but I'm just saying that with respect to where is the most upside, where you can have, because, by the way, charter rates, Ian said, were low 20s. Those ships should be in the, high 30s or low 40s. So we're still a long way to go from where the market improving can take us. So we're not there yet. There's a lot of upside in the containers anyway.
Aristides, what's the sweet spot?
I think that the sweet spot is in the whole really spectrum of container ships still. We've seen charter rates triple in the case of the bigger vessels recently, and I think they caught up. Charter rates for smaller ships have also more than doubled. But still, this is from an extremely low level where we were. Most people here follow dry bulk closer, so I can give an analogy. I think that container shipping is lagging the dry bulk shipping by about a year. In 2017, container ships, and I'm talking about all the charter vessels up to 10,000 TEU, were earning either being idle or earning operating costs, just like we had with the dry bulk vessels in 2016. Now we've seen a recovery. It's not completed, but it's underway, and I think that we will continue to see improving charter rates towards historical average rates within the next year or so, if we don't have, these trade wars and all this discussion affect mainly sentiment, because sentiment unfortunately drives markets quite significantly.
Thank you. Ian, in the short time we've got left, one last question for you, and perhaps the other panel members can comment on if we have time. We heard from Philippe and the other esteemed members of the last panel that reducing speed was the panacea to all ills. It's certainly in the bulk market. Is that advice the same? Does it apply in the same way to the container market?
Yes, it does. I'm not a marine engineer, but the same facts apply to container ships as they do dry bulk. If you slow down, you burn less fuel proportionately. And I suspect, like the dry bulk industry, for sure the container sector has been slow steaming for the last 10 years, particularly on the long trade lanes, the Asia-Europe trade lane. So in the old days, a loop of 9 or 10 large vessels between China and Europe is today it's 12 vessels because of the ships have slowed down. How much more capacity there is for slow steaming, I don't know. You would expect that opportunity to have been grabbed as much as it could have been in the last 10 years with higher oil prices and pressure on earnings.
George, any comments on that?
Yes. The best gift given to us is the regulation starting from 1st of January 2020 for containers. Container ships have 5 times the engine of a tanker or a bulk carrier on a similar size ship. So it's like you're driving down the street with a gas-guzzling car with a huge engine. Therefore, in containers, speed limitation is going to be more severe than in dry bulk or tankers, because the effect is going to change a lot the fuel consumption. So we believe coming to the 2020, we will see a fleet reduction as we expect the fleet to slow down substantially, creating a lot more economies, by reducing. Yes. So
I woke everyone up.
yeah, so for containers, the effect that the dry bulk people mentioned, it is going to be multiplied since the engines are so much bigger and the consumption is so much larger.
Thank you. Right, final question, working from Aristides on through the rest of the panel. What's the biggest challenge to the container industry that you see, the container market? Very, very briefly, 10 seconds, each panelist.
I don't really see a challenge. I see good times ahead.
Wonderful. Ian?
People forgetting about the hog cycle and over-investing in new ships.
And George?
5 letters, Trump.
Thank you very much.